Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 20 to 6 p.m. on Friday the 12th of February 2021 and we're going to spend the next few minutes looking at Tesla. Right then, so the first thing we're going to do as always is we're going to start with our basic technical analysis first and our Elliott wave analysis second. So we're going to clear the chart and we'll just give everybody who's new here to the channel a quick rundown of how the chart's constructed. So we have 4 exponential moving averages on the chart at 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side. It is a visible range, so when we adjust the chart, the data adjusts. We have a built-in point of control, which is a yellow dashed line. We have an RSI set to a 10 close with the 30 green level representing oversold and the 70 red level representing overbought. And we have a MACD with a 10 for the short term moving average and a 20 for the long with a 9 to smooth. We are on the weekly time frame currently. So what can we see? What can we see on the weekly time frame? Well, first things first, we have a slightly bearish week this week, engulfing the previous candle, but we have to remember the week hasn't closed yet. We're still trading for a few hours. We've essentially gone sideways for 1, 2, 3, 4, 5 weeks now, consolidating sideways. We can see that we are still above the 10, 20, 60 and 250 exponential moving averages. No reason to be bearish yet, although I'm bearish long term in terms of Tesla. But we'll talk about that later. We have the RSI coming from the overbought conditions above 70, cooling off somewhat, not quite in the neutral 40 to 60 range, losing bullish momentum on the MACD as well. A series of darker green bars in the histogram declining as the short-term moving average approaches the long-term moving average, ready to cross over for a bearish cross. Doesn't have to happen. We could reverse and move higher, but we are set up for a bit of a move down at the moment out of this consolidation. But like I said, the week's not closed yet. We've still got our Elliott wave count to talk about. No reason to be fundamentally bearish yet, as we're still above all these major moving averages. But let's come down to the day time frame and see how things look on the day time frame before we do our count. So price currently trading below the 10 and the 20 exponential moving averages on the daily. Approaching a bearish cross, but as we saw here, drawing this wave 3-4 consolidation here. We had multiple crosses and close calls here with the moving averages before moving higher. We might be in a triangle now or in a flat correction before moving higher. Still above the 60 to 250, back into that neutral territory on the RSI. More bearish momentum building here, as we can see darker red bars on the histogram as the short-term moving average moves away from the longer-term moving average, but no significant breakdown in price as of yet. Right, let's bring up our Elliott wave count and full scale the chart for a moment. Now, a couple of things I just want to discuss. We've got our fib channel here. We're in the log scale, so we've used our fib channel. We located our swing high, swing low on the primary scale here, 1, 2. This has led us to find our wave 3 at the top of the fib channel here into a 4. Now we're looking for that wave 5. I suspect we might be moving higher to try and find that wave 5. I've been saying for weeks now that we're in that 5th and final wave up, and we are. Well, I can't prove it for certain, but I believe it. If I just show you what I mean, I believe wave 4 bottomed back in November of last year, and we're now having done a 1, 2, 3, 4 in that 5th and final move up for Tesla. Okay, so how close are we to finishing it? Well, that's what we're going to talk about next. So let's just shut down this wave and have a look at our count on the smaller time frame. Let's just zoom in from the bottom of our primary wave 4 here, and I'll just talk you through the count. Come down to a 2 hour and auto the chart. Right, so bottom of primary wave 4, we do a triangle in an A, B, C, D, E, and then we get minor wave 1, 2, 3, 4, 5, intermediate wave 1, 2, minor wave 1, 2, 3, 4 as a triangle here, A, B, C, D, E, complete in a minor wave 5 into an intermediate wave 3, and then we're presented with this bit of a mess, to be absolutely honest with you. It's a bit tricky to count this and to figure out what's going on at the moment, so we're going to just have a muck about with it live now and see what we can see. Okay, so we can come down to the 15-minute. So there's a few ways of interpreting this. We've got a series of lower highs, right? We've got one low here, swing low, And then we've got another low which is just formed today, and we seem to be moving up off of it. Now it could be temporary, we could break lower, but if this is a low, then you've got an argument. If we're keeping things simple for a moment, you've got an argument for a free wave structure complete. Okay, so how could we label this? Well, I think we'd have to take this high as the B wave. So we would go A, B, C, like that, done. And now we're going to move higher out of here, take out this previous high. That's one way of looking at it. So subwave count, let's have a quick think about this for a moment. We could say you've got a flat pattern, right? So let's just have a quick look at the possibility of that. We have to say A to here, B to here, and then 1, 2, 3, 4, 5 legs in a C. A, B, C into the A, then we'd have to say zigzag A, B, C into the B, then we'd have to say 1, 2, 3, 4, 5 waves in the C. 3, 3, 5, done, off we go. Right, that's one way of looking at it. Which, you know, it counts, okay. It's not particularly pretty with all these, you know, volatile moves and gaps, but we're doing the best we can. Another way to look at this is if we've actually got a triangle. Again, it is a wave 4, so it could occur. It's on the intermediate time frame, but it could occur. And we could have those same 3 waves into an A, say 3 waves into a B, then we could have an A, B, 5 waves here, 1, 2, 3, 4, 5, into a C, into a D, into an E, and then off we go higher. Okay, so at this point, if you're, let's say for a moment you're bearish, right, or let's say you're currently short in Tesla in any way, then unless you're willing to take on more risk, the top of this proposed intermediate wave 3 at 901 spot 42, this is your cutoff. Because if we come back above, the only way you can be bearish at the moment is our last way of counting this, I think, which is that we go 1, 2, 3, 4, 5 into a wave 1, zigzag into a wave 2, and then we go 1, 2, 3, 4, 5 into a 1, 2, and then we get moving down into that 3. That's really the only. I mean, I can't start counting this as a 3 if this is a 1, 2. I'd have to count this as, you know, 1, 2, and then 3, 4, 5 wherever down there, and then I'd have to count this as a 1, 2, 3, 4, 5, and then that would have to be a 1, 2, 3, 4, and so on and so forth on varying, or constantly lowering wave degree. Right, that's the bearish way of looking at this count so far. I wish I could tell you or give you more confidence either way, but this is a really bit messy at the moment. So, things we should look at. We've already mentioned this high here, okay? If we go above this, we can't be bearish in the short term, we're going to go higher, right? If we then we've got our triangle we're talking about. Well, in that case, if we were to take out the low here at 780 spot 79, then we can't really be bullish in the very short term, all right? Because it's likely this is it's likely that this is a C and this is a 1, 2, 3, 4, and we've still got a 5th wave to come to find that A, B, C, or the bearish case is correct, and we've done 1, 2, 1, 2, and then we're moving into a more violent correction down. Bit tricky. I know we need more confirmation at the moment. We need a more, in this side, we've been moving sideways for a while, and we need something clear to occur in order to be more certain, and we can't be particularly certain at the moment. If this low does get taken out, however, down here at 780 spot 79, I will then start considering the bearish count a bit more, because that initial move down, and I'm sorry if I'm waffling a bit, but the initial move down looks a bit like a diagonal, okay? If I show you what I mean. So like we've got this kind of wedge. We've gone 1, 2, 3, 4, 5. You see we've got these lows that join together, closing into a wedge, so you can count this as a 1. Right? One. This, I'd love to see this as a three-wave structure formed differently. It would have been so much nicer if it had just done this. Just taken out this sodding high here, then this 5-wave move down would make so much more sense. But unfortunately we get a lower high here, so we either have to do something really ugly, which is say A, B, truncated C, and then start moving down from the B wave here into a C. Well, I don't like that one bit. Okay, I'm not happy with that. I'm alright with this as a diagonal, because I can go 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5, okay? It's not pretty, but it would be a leading diagonal, so it would have an impulsive structure of 5, 3, 5, 3, 5, rather than an ending diagonal of 3, 3, 3, 3, 3, 3, okay? So that kind of works. But then we don't get that high after this 3-wave move here, which is I don't like. That supports the triangle better. So that this is part of a 3-wave. So this here, 1, 2, 3 is part of a 3-wave move down, rather than a 3-wave move up like that, which doesn't work because of that truncation in that final leg. It fits better as 3 waves here, 3 waves here, bum bum bum, and then 5 waves here, okay? That looks better. That count supports the flat count or the triangle better than the bearish count of an impulse, because then we're going 1, 2, then we're kind of forcing a 5-wave count into here to be 1, 2, then we've got to get another 5-wave count into here and get another 2 retracement below this high here, and we're just getting more and more complicated. So unless we see a break of this low here at 780 spot 79, and we see a violent flush down through this level, we crush some of those moving averages on the daily and on the 4-hour. We see some bearish momentum building up on the MACD. We see a breakdown in the RSI. We see all of those traditional metrics to give us some confidence. Then we can consider that more bearish count. But for the moment, I think, for me, this counts better as an A, B, C. So I'm going to leave the option. I'm just going to label it A, B, 5 waves in the C here. But I'm going to label it A, B, C zigzag to here. Okay. And then, well, if that's the flat pattern, we'd have to then force a 5 in here. 1, 2, 3. I see. I'm not happy with that. It's this bloody truncated movement here. It's got to be part of a 3-wave move down. So you know what? I think I actually prefer, until this low gets taken out, I think I prefer that triangle. Alright. It's not perfect. It's not perfectly symmetrical, but we get a 3-wave move to here. Okay, we get a 3-wave move to here. We get a 3-wave move to here. We'd be looking for a 3-wave move to here, 3-wave move to here, and then so on and so forth. That's pretty much the best I can do for the moment. I will just put up the alternate in orange. Let's just say that we're saying that this is a 1, okay? We can't call this R2 because of this would have to be an ABC into a 2. We've got this truncated C and I'm just not putting up with that. So we're going to say 1, 2, and then we'd have to go 1, 2, 3, 4, 5. So we'd have to look at a smaller time frame. So, sorry, let's just move these down here because they're going to be way out the way. Don't worry about where I'm pointing them. They won't make any sense there. They're way off in the distance. So, and then we'd have to say, so I said 1, 2 to there. Then I'm going to have to say 1, 2, 3, 4, 5, 1, 2 to come, 3, 4, 5 into the 3 on a smaller time frame. So, like that. So retracements really off of this high. What have we got? 50 at 832 spot 12, 61.8 at 843 spot 40. The blue line and the yellow line here, right in amongst all of this volume on the profile. In fact, the peak of the volume hits the 61.8. So I'm sorry if I'm working a little, unprepared here, guys. I did have a count working on this chart which was taking the correction from back here, but I've recently changed my mind on that, and I said I would cover Tesla, so I'm covering Tesla, and this is an opportunity for you to see how I'm just thinking while I do things as well. So I'm going to have this here, this yellow dashed line here, right near all this volume. This represents a 61% retracement from this high here, which is a proposed 1 down. So we go 1, 2, then we go to 1, 2. So sorry, it's the minor wave count. So this count, you could argue, 1, 2 is invalid. We can do better than this high here. Sorry, let's put out this high here, and let's put a red line on it. So if you're bearish, you've got to believe that this is a 1, 2, and then that this is a 1, 2, or the start of a 3. Well, it would obviously be the start of a 3 because it's on a smaller subwave, a smaller wave degree, but you'd have to believe that this is a 1, 2, 3, 4, 5 on an even smaller scale. So let's just 2, 3, 4, 5. Okay. So then we'd be looking for a retracement somewhere around 50 or 61.8 from this high here to get our wave 2. Problem is, what's the wave structure going to be? Okay, if we get a 3 wave structure up, it could be a D. As long as it comes in below this high, it could be a D of the A, B, C, D, E triangle, and then we're going to start coming back down. So we won't really know until we get a move up to here, which either takes out this high. If it does, we can scrub the bearish count in the short term. Take out this high, you can scrub the bearish count completely in the short term, because we are definitely going higher. Okay, but if we do come up some kind of 3 wave move to here, and then we start seeing 5 waves down, right, another impulse wave down, and we take out these lows, I'd be much more confident that this is bearish and we were just building up a series of 1s and 2s before we go lower. If we get a 3 wave move back up, right, to here, this trend line, the 61.8, this could easily be a D 3 wave move, then we'd expect to see another 3 wave move to finish the E, then we'd be going up. A bit of a higgledy-piggledy mess at the moment. Sorry guys, but it's just the best I can do at the moment. I need more time to just looking at this chart until we get a specific break up or break down, and we get to count the waves of that move and see which levels get broken. We can't be really sure what's going on at the moment. So this is one of those occasions where sometimes you just need to switch off the Elliott wave count because it can just confuse you more. It's great, it's a wonderful thing, but sometimes you get so caught up in it. And we really want to just be focusing on a break of this range. That's really it. I know it's going to bring everything back now, but a break of this range. Okay, these pivots and this pivot. That's what we're keeping our eyes on at the moment. Going to have to just ignore the Elliott wave count, focus on this pivot high, this pivot low. Keep an eye on the wave count, see how it develops. If this low gets taken out, then we're not looking at the triangle, are we? So we have to make the flat correction or the bearish impulse wave fit. If we take out this high, then we're definitely going higher, and this was a flat correction or a completed triangle. That's what we're looking at. So on the longer term time frame, day time frame and all that, you just need to keep an eye on these moving averages, you need to keep an eye on your indicators, you need to see some kind of significant break up or break down, and we're not really doing either today on Friday. In fact, we're completely flat for the day as I speak, and we're right at where we opened, right at 801 spot 29. We've just turned green, we've just turned red again. We really are just kind of mucking about at the moment. So that's the best I've got for Tesla at the moment, guys. You all know my long-term view. This is insanely overpriced stock and will crash like crazy. But I think we've just got, I'm still leaning into the idea, I think, that we've got one more move up in this fifth and final wave. You know, the pitchfork we've been looking at. Which one did I just put on? Yeah, hiding your drawings, you flunker. So the fib channel and the pitchfork, which found our first and third wave, are still calling for the fifth wave to be back at the top of the channel. One more move up. If we break out that high at 901 spot 42, we're going to push for that, and we're going to push for higher, and then I think we're done. If we break down from here, take out the low at 78 spot 79, then we can start to consider the bearish case more. But you've still got to, well, I was about to say, you've got to be more cautious how you short this if you want to short this, but you can take on whatever kind of risk you want. I'm not giving you financial or trading advice, but for me, I want to see some kind of move down, which we can say is a 1 on a larger time frame. 1. Then we can get a 3 wave move up to 50 or 60%. Then I can short this knowing it's a 2. Then we got a 3. I'd be happier doing that and just being patient. Alright then guys, that's the best I've got for you on Tesla today. Sorry I've been waffling a bit, I try to avoid it, but sometimes you just got to waffle a bit, haven't you? Right, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, leave us a comment in the comment section below, let us know what you think. Feel free to share these videos. I will try and get another one out to you this weekend on something or other. I've got so many charts to cover and to look at, but I'll give you something if I can. And until then, take care of yourselves, speak to you soon. Bye bye.